everybody. Welcome to Monday Morning Must Knows. My name is Merlin Rothfeld, and here are three very important things to pay attention to for the upcoming trading week. Now, last week we talked about a lot of economic data, and surprisingly, last week's data was rather negative. But lo and behold, we had a bear market rally, a nice surge to the upside, which I'm sure made a lot of people warm and fuzzy. Big question is, what's going to happen going forward? You have two extremely prominent, high-level presidents of major financial firms saying, there's an economic hurricane coming. We're headed for some serious troubles in America. Our financial markets are in crisis. Blah, 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 blah. Let's spread fear, uncertainty, and doubt in the marketplace. You're a big financial firm. You're allowed to do that. But us, as retail traders, remain calm. Have a plan, and let's just know the data when it comes out and how to react to it. That said, let's talk about the first piece, which is going to be earnings. It's actually a very light earnings week. Last week we had like 200 and something companies. This week, only 159. We start things off on Monday with Coupa Software. Tuesday brings you Casey's General Store, Dave & Buster's, and Cracker Barrel. Wednesday, you've got Five Below and Campbell Soup. Thursday, you have NIO, the electric car company, DocuSign, and Fuel Cell. And on Friday, you have nothing. So a very light week with regards to earnings announcements. So be careful. Check your earnings calendar just to make sure that the companies that you have in your portfolio aren't reporting earnings. If they are, practice a little bit of risk management. How you do that? It's going to be up to you. All right, step number 2. We're going to talk about some central banks. Now, right now, I believe that every central bank around the world is on center stage. And here you can have the Reserve Bank of Australia, that's the RBA, on Tuesday, right after midnight at 12:30 a.m. Eastern Standard Time. They're coming out with a rate announcement. And that rate announcement, fairly aggressive. The expectations are they're going to go from 0.35% all the way up to 0.75. Now, keep in mind, we've had a lot of central banks aggressively raising recently. But that's not the only one reporting this week. That's Tuesday. Then we jump forward into Thursday. You've got the European Central Bank in a report. That's going to be at 7:45 a.m. Eastern Standard Time, and they're staying at 0. Now, this is really interesting, and in my opinion, this is a soap opera going forward because you have the United States has been aggressively raising. You have the UK has been raising. You have New Zealand aggressively raising. As you can see, the Reserve Bank of Australia just beginning to aggressively raise. They were at 0. They jumped to 0.35. Now expectations are 0.75. Very interesting. Why is the ECB staying at 0? It's like everybody else in the world realizes, hey, inflation's a problem. We have to do something. And Europe's going, no, mate, we're good. It's good. We'll just leave it alone. We'll just keep it there as long as possible. I'm hearing rumors of them saying they're going to keep it there till 2024. If inflation keeps rising, there's no way that that can happen. They're going to have to start raising at some point. So it'll be very interesting to see not only what that announcement is on Thursday, but what does the ECB say about rates and their overall economy going forward. Now we'll move to our final piece, which is going to be inflation. Yes, I know you're probably sick and tired of me talking about inflation. However, on Tuesday at 8:30 a.m. Eastern Standard Time, we have consumer price index numbers coming out. And I know that you're probably just saying, I'm bored with inflation stuff. Well, it's really important because a couple weeks ago, we had the core PCE price index numbers come out, which was in line with expectations, actually showing that inflation is slowing down according to that metric. And as you can see here on the hard red edge, we had a significant decline in the CPI numbers in the previous reading. Expectations are, well, we're probably going to see a slight increase here, but you know what? I don't know which way this one's going to go. If we see inflation numbers continue to decline, this takes a huge weight off of the Federal Reserve. They may not raise as aggressively. And because of that, because the expectations right now generally are we're seeing inflation slow down and no longer surge up, that all of a sudden the Fed may backpedal a little bit. As you know, at the next meeting, they're expected to raise 50 basis points. But what if that inflation number comes out totally under control and going back to normal levels? Does the Fed only raise 25 basis points, or do they pause raising? And I believe that's why the markets are starting to have this little bear market rally, nice little pop to the upside. Bottom line is, these economic announcements are going to create volatility in the marketplace, whether it's the Reserve Bank of Australia, the European Central Bank, CPI numbers, or just the plethora of other economic data being reported this week. That, my friends, is your Monday Morning Must Knows. Be careful out there. We'll see you next week.